Union Bank is the company in focus. The lender posted second quarter numbers and profits jumped 34%. We asked Nitesh Ranjan, Executive Director, to put these numbers into perspective and about the growth outlook. Listen in.
So for the quarter ended September 2024, Union Bank of India has reported good set of numbers, both in profitability as well as the business. And also the most of the guidance parameters, including the recovery and slippages, bank has reported in line with the guidance. So far as margin is concerned, you will recall that we had given a guidance that during the current fiscal, our NIM will be in the range of 2.8 to 3%. And in fact, for the Q2 also, our numbers have been 2.9, which is in the mid-range of that guidance. Having said that, there is still pressure on the cost of funds while a large quantum of deposits have got repriced over the last 1 year, but still the deposit rates remain elevated. Our sense is that deposit rates have perhaps peaked out, but it is going to remain elevated for quite some time, maybe around 6 months or so from now, till the time we see some action from RBI in terms of the rate cut.
Okay. All right. I just wanted to understand, you've said that your guidance is, between 2.8 to 3%. Just wanted to understand what is the rationale behind this, given that your RAM, you're saying that, you expect to, bank on RAM advances going forward, and it's a high yielding book for you. That is also seeing a bit of a slowdown on a sequential basis. So what is the rationale behind sticking to this guidance?
So if you look at the RAM book, we have been growing in the range of 12 to 15% for the past many quarters if you look at the annualized growth rate. This year in the first half, first few months have been very lean actually, but we have started seeing the pickup from mid of August in retail as well as the MSME sector. And now being in the middle of the festive season, we feel that this trend is going to continue only. And we are seeing a good traction in terms of the new sanctions, both in retail as well as in MSME. So this should help us in achieving the guidance level.
So also wanted to understand, after the whole MTNL fiasco, Union Bank of India has actually, let go of some of the corporate loan book exposure. So just wanted your sense on that as to, going forward, what is your sense on corporate loan growth? Are you seeing some slowdown there? What is your outlook on the same?
See, 45% of our loan book is to the corporates, right? And over the last 6 months or 12 months of also, if you look at, we have seen good demand coming from few sectors within the corporate, be it road sector, iron and steel, chemicals, some of the renewables energy, data center, logistics. So there is a good demand that we are witnessing. And of the 11 to 13% the guidance that we are giving for the overall loan growth, I think corporate is going to contribute a lot. Yes, during the quarter, you might have seen there's some subdued growth in the corporate sector. That is because we have let go some of the low yielding corporate loans opportunity in the market, because we have to ensure that we are in the guided range of NIM of 2.8 to 3%. Otherwise, there is a good opportunity in the corporate.
So going forward, which sectors are you looking at in terms of corporate loans that are attractive right now?
As I said, there is no particular preference for the sector. It depends on the opportunity, the promoter, and all these things. And I already shared some of the sectors from where we are seeing the good proposals are coming to us. As of now, we have close to around 35 to 40,000 crores of proposals under discussion for the sanction. And these are typically into the road sector, iron and steel, chemical, renewable energy, logistics, and so on.
Sir, also would like an update on the MTNL bit. Sir, what is the recovery plan on that? If you could just provide a status on that.
I'm afraid I will not be able to speak about a particular account.
Okay, no worries, sir. I completely understand. Sir, moving forward on the MSME lending space, MSME is also witnessing some slowdown. What do you think is the reason because of that, and when can we see a revival on the same?
Yeah, as I said that in the retail, agri and MSME segment, first few months of this half year, we have seen very lean progress. But from middle of the August, there is a good traction, there is a good demand. And that's why you'll notice that even in MSME, sequential growth rate during the quarter is around 2.8%, which on an annualized basis is a good number. And as of now, we are focusing on various MSME clusters across the country. And we are hopeful that there should be good sanction and disbursement in MSME during the second half of the year.
Okay, okay. So one thing, the slippages, your slippage ratio has touched a 2-year high, in the second quarter. Credit costs are also rising. This is also impacting asset quality. I mean, it's not just for Union Bank of India. We are seeing this trend, taking place across, the banking sector. Just wanted your sense on that. Would you say that, good asset quality numbers are kind of behind us now? And how do you see asset quality, the trend going forward from here on, given that the whole economy is witnessing a slowdown?
Yeah, first of all, you look at our guidance for the gross NPA, which is for 4%, and we are moving towards that. Continuously, we are bringing down the gross NPA quarter after quarter, and this quarter it is 4.36%. Secondly, I think from our bank data, I can tell you we are not seeing any kind of serious asset quality concern for any book in the bank. Yes, there was a large account which we had highlighted during the Q1 con call also, that is in stress, and that stress has actually materialized, and that account turned NPA. That is why the delinquency ratio, credit cost, everything looks higher for the quarter. But if you remove that one-off large account, I think delinquency as well as the credit cost either in line with what we have reported in Q1 or in fact better than that.
Sir, I understand that unsecured retail book exposure is not as high for Union Bank of India. If you could just throw some light on what other segments, are leading to the rise in slippages?
So if you look at the numbers for Q2, even compared to the sequential basis Q1, in fact, there is decline in the new slippages in retail, agri, as well as in MSME. Only in the corporate there is increase, and as I said, that is because of the one large account. Otherwise, we are not seeing any increase in the slippages. In fact, if you remove that one large account, then the slippage for the quarter for Union Bank of India is around 1,800 crores, which even compared to Q1 is lower, which was around 2,100, and previous year itself it was a little higher. So actually, we are seeing stability at the current level of, you can say, on an average 2,000 crores of slippages per quarter.